Now, my first guest here has been an ardent supporter of Jay Powell, at least his efforts, until last Wednesday when in this studio she called the FOMC decision mean-spirited. I want to bring in QI Research CEO and Chief Strategist Danielle DiMartino Booth. So, this morning we had consumer confidence. It came in below consensus. Both President and expectations saw declines. Philly Fed manufacturing report saw a massive decline. When you see these sort of things, and Powell, this first thing he said to Congress this morning was that the economy is strong. Is he out of touch?
Well, good afternoon, Charles. And I think it's patently apparent, especially on the day that we see expectations in Conference Board consumer sentiment come in at levels that were right there in 2008 when the U.S. economy was already in recession. Americans have said for 6 months in a row that the job market is weakening when they're queried by the Conference Board. And yes, it is quite clear. I love the segment that you just played. Do the job, Jay Powell. Do your job. And put your listening ears on and pay attention to what Americans are telling you in no uncertain terms. That is, make monetary policy in the public interest. It's your job. Do it.
Case-Shiller also out, down 0.4%. The street thought it would be fractionally higher. And the question on that is how possible, or is it possible, that housing deflation could offset any sort of assumptions or higher goods inflation?
Well, Charles, that is the largest single input into inflation metrics. And so, yes, of course, it is telling us it took a long time for the increase in home prices, the increase in rents to show up in the CPI. But now it's actually going to be the largest drag on inflation going into the second half of 2025 and in 2026. And yes, of course, it's going to be larger than anything that we see when it comes to goods inflation, because we still haven't seen any of that come through in tariffs. What we're instead hearing is company CEOs and CFOs saying that they're having to deal with a margin squeeze because they're not able to pass along higher costs to Americans who, by the way, did I mention, for 6 months in a row, they've been saying the job market is weakening. Yeah.
Hey, I have to then ask, right, because Powell seems very comfortable in his position. He keeps, he seems like, okay, I've got my feet up. We've got the leisure or the ability to relax. Explain to the audience the risk if the Fed waits too long. If they do wait too long to cut rates, then what is the risk?
The risk, Charles, is they're going to fall so far behind the curve that they're going to have to come in and be a reactive instead of a proactive Fed and slash interest rates, which would be seen by the public, and rightly so, as being an act of panic. I'd rather have the Fed be on top of what is happening in the economy today than to be trying to ride through on the back end with really large rate cuts. These are individuals who are supposed to be in leadership positions shepherding the U.S. economy. It is time for him to do his job.
It is. Danielle, thank you very much. Appreciate it.
Thank you, Charles.
All right, see you soon.